Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality free trading education. Now, without further ado, let's jump straight onto the charts.
In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong monthly historical structure level. In fact, this zone was already acting as previous support here, preceding all these rejections to the upside. And we can see how at the moment the market is testing once again this level as support. We can see here the market tested it and rejected it to the upside. And at the moment we're seeing the test of the exact same level, from which there is the possibility of seeing bullish price action being developed away from this zone. So by looking at the market here on the monthly, it is quite clear that there is the possibility to see bullish price action rejecting this level to the upside, as already happened every single time that the market tested its zone. If we drop down on the weekly time frame, what do we have? Well, from a weekly perspective, we can notice another interesting thing. We can see, in fact, how in creating this move to the downside from this high to this low, the market has also created an M pattern. And in general, after the creation of an M pattern, which is exactly this one here, you would expect the creation of a move to the upside. In fact, you would expect the market to potentially go and complete the pattern at the neckline, which is the previous support turned resistance. Now, in this case, the completion zone of the M pattern being the neckline exactly at this level would be this zone here. So there is a possibility for bullish price action to be developed here on the weekly time frame for the completion of the weekly pattern. Now, in this case, the completion of the weekly pattern would also mean that the market would be rejecting the monthly support and demand that we have just identified by looking at the monthly time frame. So this means that essentially we have a higher probability of this potential move to the upside. Now, if we look closely at where the completion zone would be for this weekly M pattern, we can also notice that it would be aligning with this previous weekly resistance, which was turned support here, which is now once again acting as resistance here. So there is definitely a possibility to see bullish price action into this zone for the completion of the pattern, before then seeing more potential bearish continuation. Dropping down on the daily time frame, what do we see? Well, going down here on the daily, first of all, we can see how I did speak about EURUSD quite a few times in the past. I spoke about this pair when the market was here. I explained all the reasons for which we could expect this move to the upside. Again, from here, I explained all the reasons for which we could expect the creation of this higher high. Then we had the creation of this pattern. From here, we wanted to see the completion at the neckline, and then the continuation to the downside with this impulse, correction, and continuation lower, which is in fact exactly what the market just gave us. And by the way, I will link in description all this previous analysis so you can go and check it out for more free education. Now, at the moment, from a daily perspective, we must notice how the structure has changed. In fact, we now have a range-bound market. In fact, if we look closely, we can notice how it is currently bounded in between this resistance and support. We have the support here at the bottom and the resistance here at the top. Now, until the market will remain in between these two levels, we could expect more horizontal price action to be developed. However, if we get a break above the high of this range, meaning above this resistance, things would get very interesting, because what we know in the market is that previous resistance, once it gets broken to the upside, it becomes support. So on the retest of this previous resistance turn support, this is where we would have very good probabilities to see more potential bullish continuation. What we also know is that in the market, the best probabilities come when all the time frames are showing the same direction, specifically all the directional time frames. So since in this case the monthly and weekly, as we have previously seen, are already showing bullish price action, if we get a break above this high, also the daily time frame would be showing bullish price action, therefore increasing the probabilities that on the retest of this previous resistance turn support, we could have institutional longing, which at that point in turn would increase the probabilities of a potential move higher. Now, why am I saying institutional longing? Because if we go and see what we have when it comes to the commitment of traders, so what institutions are doing in the market, and we check the data precisely for the euro, we have to notice how the first thing is that if we're looking at the euro, we are already looking at EURUSD, because all currencies on the spot are traded against the USD. So if you're checking the data for the euro, you're already checking EURUSD. And what we can see is that in the long term, we went from a situation where we had only 105k net positions, and now we have 158k net positions. So even though in the short term net positions got decreased, with institutions decreasing their longs that went from 260k to 36k, anyway, in the long term, EURUSD has been longed from an institutional perspective. So even though in the short term it is getting weaker, which we can see also by the price action, which has been in a downtrend, anyway, in the long term, the trend is for institutions to be increasing their net positioning, therefore moving their positioning to the bullish side. So if we get a break above this resistance on the retest, this could be a very interesting area, inside of which institutions could be adding more longs and closing shorts, which would increase, again, net positions to the bullish side of EURUSD. So if we do get the break on the retest, how we could be approaching a potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily, combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment there is a special promotion in which you have a huge discount on the upfront price of the mentorship program from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if after you join the mentorship program directly from your student dashboard, you open your trading account with them and move your trading there, you can get a full refund credited back into your trading account. And if you scroll lower here, you will see that there is still time to join before the offer expires and price goes back to normal. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in description.
If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.